and welcome to Martyn Lucas Investor Walk and Talk. We've not done one of these for a while, so I just felt like going out tonight to get some exercise. I've not had any exercise for ages, so this might be quite stressful. In fact, I can already feel it. So I haven't done any exercise for a while, but we'll talk about the stock market, all-time highs, what we might expect from tomorrow, from the banking stress test, and other things. So this will be quite a short walk and talk. Don't expect it to be very, very long. Just maybe 10-15 minutes. Maybe going to do 2 laps. That's all. Let me know you're here. Come into the chat. Say hello. And it's extremely hot here in Texas. It's you can hear all the cicadas. You might think they're locusts, but they're cicadas. And you hear that sort of rattle noise. It's like a rattlesnake. They're all living in the trees now. Anyway, it's like out of a movie, isn't it? Whew. Yeah, one lap of this is going to be enough. The heat is just ridiculous, so it's sapping. Anyway, welcome everybody. Who's here? We've got Zach Zeitz here. Zach, thank you very much for your video. I've got that you sent to me on WhatsApp. I knew exactly what you were doing. Absolutely great. Of course, the Wolf of Wall Street. I'll be sharing that tomorrow, so thank you for that. 4 years tomorrow, and it's been perfect timing, because literally, virtually to the day I predicted we'd get this face-ripping rally. It's happening. All-time high, $5,000 to $470,000. What a journey. I mean, can you believe it? In 4 years, we've built a YouTube channel to just coming up to 86,000 subscribers. A portfolio from $5,000 to $470,000, with nobody watching, to now we have shows. The highest show we had was 130,000. We've interviewed CEOs. I've got a team, Vaz and Sensei. Sensei's got the newsletter now, his own business and the shop. He did an interview this morning for me, preparing for the CEO interview. So we interview CEOs on the show. What a journey. Just shows you that anyone can do it. If you just work hard, work harder than anyone. If you want to work hard. Look at this, folks. Only in Texas. Look at that for a caravan. Look at the size of that. Look at that. Flipping heck. That's as big as a house. In fact, that's bigger than my house in England. That is bigger than my house in England. Flipping heck. Amazing. Only in Texas. Anyway. Yeah, what a journey it's been. And the question is what comes next? Tomorrow, it's our 4th anniversary. It's a members event tomorrow. So it's members only viewable, because we're going to celebrate. We're going to have live phone-ins. We're going to have some fun. Might do some music live. We're going to drink whiskey. We're going to celebrate. We're going to just talk about our journey over the last 4 years together. We do have some vital data in the morning, some inflation numbers, but I'm expecting them to be good. So we're expecting another rip-up rally tomorrow. So expecting tomorrow to be very nice. We've got the banks doing a stress test tomorrow. JP Morgan and Goldman Sachs expecting to do well. The banks, the financials, I told you months ago, are going to lead the charge, and they are. So we're very happy to see that's happened. So tomorrow we're going to get the banks do well. They're going to outperform. They're going to pass the test. And we're going to see the market continue its upward trend. So the question is, what comes next? I spoke to Sensei tonight, and he was saying, aren't you taking profits? It is unrealized gains. Unrealized gains means you haven't sold. It's just paper money. Well, that's very true. But, and by the way, everyone watching, I will come to your comments and questions in a second. So please continuously leave comments, and I will come to you in a second. The point is, you have to decide, and I think I've proven 100% that there's many ways, many strategies you can employ to invest, but there's no question about it, and Sensei backed it up yesterday with lots of data in the newsletter, that large buying with conviction at undervalued levels is far, far superior than dollar cost averaging. Dollar cost averaging, holding cash, none of these things work. They work because the markets go up. So it's not because they're the best strategy, it's just because the market goes up, so over time you win. It's like if anyone says, oh, I bought Binky Bonk coin and I made money. Don't tell me it's not a good investment. You got lucky. And by dollar cost averaging over time, you're going to make money, not because you're smart or clever, it's just because the markets go up over time and you're going to go up. Is it the best way? Well, it's the best way for most people who don't want to read the news, don't want to follow the stock market regularly, and don't want to look at it, just want to live a life like what I'm doing now, going outside. But if you enjoy, like I do, numbers and the markets and the news of it all, and you study it all the time, then it's unquestionably better to do what I have been doing by buying massively on the oversold positions. Not about price, not about whether it looks cheap or not. Simply, is it undervalued? Well, the S&P will never be undervalued, but at 17 times earnings, that was my key moment, and why I went so much in with so much money and so much margin and so much refinancing, and now the evidence is proven out. Warren Buffett doesn't dollar cost average every day, and someone came onto the show yesterday and said, yes, he does. He even recommends it. Very often people take what Warren Buffett says out of context. Warren Buffett was famous for saying, buy when there's fear on the street. And yet Bitcoin crypto channels use it all the time. Warren Buffett was not referring to Bitcoin when he said that. You have to get it into context. So dollar cost averaging works over time, but it's not the best strategy. It isn't. We proved that now with our live stream we did yesterday. The data shows it. Anyway, so what happens next? Let me read the comments first. So we got Zach Zates here. RB, hello RB. Come to Sweden, it's only 15. Kata, yes. I've got family in Sweden, so I'm familiar with that. You're right. Been a while since walk and talk. Yes, RB. Been a while. Zach, thank you for the video. Mark Saxby, evening Martin, has the 4 years gone quick, mate? Flipping heck, 4 years. I know, but that's another lesson there to learn about how fast time does go by, and you really should be investing for the long term, because all of a sudden the long term is today. And it really, as we get older, it comes around quicker. We'll talk about that in a minute. Money Making Mitch, hello all. RB, Nate, good evening sir, how are you? Mickey and Nana Jules, hi everyone. So let's talk about it. You can trade, you can swing trade, you can day trade, you can scalp trade, you can long-term invest. They're all right in their own ways, whatever gets you engaged. But I think after 4 years of data, and I've got tons of the stuff, data and analysis, measuring everything, it's becoming more and more apparent to me that long-term investing and buying aggressively when it's oversold, not when the price is down or not when it seems cheap, but oversold, works better than any other strategy. And you might have to wait. So here we are, 5,000 to 470,000. Here we are. That's my portfolio right now. Marvelous. So what do? Do I sell it all and cash everything out and pay a lump of tax and then look for the next position because it's going to naturally at some point trim off and go back down again? That's a silly idea, because yes, the market can go down and now it's expensive. The S&P is 23, 24 times earnings. It's frothy, but the businesses are growing and they'll grow into the prices because new businesses replace the old. We're going to see crypto businesses rise to the top of the S&P 500 in a few years. We'll have bigger market caps, bigger profit gains. Software and crypto is obviously much more profitable than regular businesses, and these are going to lead the S&P. So you've got every reason to believe the S&P is going to be higher than it is today. And not only that, the margins are going to be greater, the profits are going to be greater, AI is going to give us greater profits. So there's no reason to get out of the market, maybe for today or tomorrow or next week. But when you want the money in a year, 2 years, 10 years, 20 years, you're going to be up. And remember, when you get out, you're not only you're paying tax, but you're looking for the next re-entry point. And if you don't find the re-entry point and it goes up 5-10% and then it pulls back, you go, oh, I'm going to buy it now at 1% drop, but you've just gone up another 5-10%, so you've just lost all those benefits that you gained by selling in the first place. It's very, very difficult. And the more I've learned over the last 4 years, the more I know that you can't time the market. You can buy the bottom, but you can't time it. And that they are very different things. I managed to buy the bottom with Liberation Day when it went down, and then I trimmed using tax lots to take back the ones I bought too many to keep my portfolio from getting margin called or gone too heavy. And then I kept the ones at the bottom. Now my portfolio is looking the way it does. So it can go down 50%, actually 48.9% is my margin buffer. Well, I think most people would agree it's not going to go down 48%, is it? But if it does, in a month, 2, 3, a year, 2 years, I'd have either no margin at that point or I'd have more cash, so I'll just buy that then. So you have to have patience, you have to wait. If you are buying with conviction and you are buying the dip, or I prefer not to use the word the dip because that gets confused, buy the undervalue or below value, historically low value, then you might have to wait. And that's what Warren Buffett does. He'll wait years. And he can afford to wait because between now and then you're earning dividends. Even on the S&P, we're going to get a dividend payout in the next few days on the S&P. And I'm expecting to make $1,600. $1,600. And you might go, well, on 400 grand, that's not very much. Well, no, it's not. But that's every quarter. And that's not why you own the S&P. You own the S&P for growth. That's just free money. That's just covering my margin payment. I mean, it's like 90% covered now. So I'm basically borrowing money for free. So, you know, the stocks I own with cash, I own. The stocks I own with margin kind of costing me nothing. So you miss out on all of that. If you sell that, you're not going to have that money. And the thing is, as the portfolio grows, because of money being devalued, if it only rises 10% a year, after you've already had the bottom by buying a bottom, this year for me it's 35%. Well, we know you can make more money by buying a crypto, but when the crypto goes over 100%, you're probably going to sell it because you're going to have fear and you're not going to hold on to it. And whereas I don't need to sell anything, so I don't need to give any money to taxman, and I'm earning dividends consistently. And after a while, you're compounding, and compounding is an amazing thing that Einstein even found very attractive. I mean, think of it now. My portfolio is 470. So that's 10% would be an average year for me now. In fact, below average, because I'll buy the oversold positions. So, I mean, this year it's like 35%. Last year was about 20. So for me, 10% is a really rubbish year. But 10% is $47,000. Well, I can tell you, when I lived in England, I had less money than that to live on. And that's for free, for doing nothing. So, and then next year, that $47,000 you've earned goes onto the pile, and now you've got 10% of 47 grand, and now 10% of the 47s, that's of the 4,700. Not exactly that, but you get the idea. So now you're earning about $53,000 a year, just on the growth. The dividend value will go up, of course, because the percentage of the stock goes up, so the dividend payment will go up. Interest payments are coming down, margin's going to come down. So it's great. So now, for the first time in my life, and this is the first time in my life, I actually have money. I've never had money before. When I had One Night in Vegas, which was a million pound business, we took millions, but I paid out more than I ever made because it was a passion. So I lived minimum cost, minimum expenses, very basic life, but I had a lavish look to my life. It wasn't really. I was just paying orchestras to show up and dancing girls to show up and booking theatres, but I was living a very hand-to-mouth business. But now, for the first time, I've got real money, and it's like, flipping heck, what happens now? Well, the answer is absolutely nothing. Just going to let it compound, because I didn't do this to make money. I did this to be successful and grow something, and it's all about building the community and the channel. That's worth more than any money, because money doesn't do anything. It just buys stuff that I don't want or need, and pays bills. Well, my bills are manageable with what I earn. So the idea is the money's there for when I don't earn money. But I'll always earn money, because I always have and always will. There's always a way to earn money. As we've always said, making money is easy. The hard part is to keep it. So what next? Well, get up tomorrow morning, 4 years anniversary, celebrate being alive and being with all of you and having a wonderful 4 years, and just keep doing that, because it's a great way to live. If the market's down tomorrow, that's perfectly fine. We've had days and days of it being up and up and up. Nothing goes up forever. But the longer it goes up and the longer this bull run continues, remember, bull markets always last longer than bear markets, and they're always stronger, all the way through history. So you've got nothing to fear. It's, when the sun shines, you know it's going to rain next. But the sun will come back, and the sun's out more than the rain. So, it's absolutely fine. And the longer this stays up and keeps going up, the safer your investments become, because everybody buying now is not looking to sell tomorrow for a loss, are they? So it just protects your position if you hold the ones from the bottom. It's why I love tax lots so much, and I sell from the top. So I keep the ones at the bottom, and they're the ones. The shares I bought 2 years ago eventually will become 10 years ago, eventually will become 20 years ago, and people will go, how much did you pay for the S&P? Just the same way as I say to Big Ed, when I say, how much did you pay for Amazon and Apple? And he says like 10 cents. It's the same thing. I want to be that person. So if you're going to be that person, you've got to start the clock ticking. It takes time. And you've not got to be put off because it's 10 years, 20 years away. You've got to stay in the game. Don't be in a race. Let it play out. And as we get older, we realise that 4 years isn't any time at all. I mean, 4 years ago I started this. It was like yesterday. It really was. It was like yesterday. I remember it like yesterday. Talking to nobody, sitting there in the studio on my own. And here we are, where we are today. So if you can get over yourself of being concerned that time is your enemy, I can't wait 4 years, I can't wait 5 years, I can't wait 1 year. If you can get over that, anything's achievable. So I don't think you should be selling the market. I don't think you should be buying the market either. Because if I've learned anything, it's buy undervalue and you can't lose. Well, right now, everything is overvalue. Will it eventually become undervalue? Well, yes, it will if you hold it long enough. So if you don't mind paying the price today and you hold it, then you're going to be up, aren't you? That's on the S&P I'm talking about, not individual stocks. That's very different. But at the end of the day, will we get a dip? Well, nobody knows. Will it go undervalue? Yes, it will. Yes, it will go undervalue. And then it will rally faster, like we've just seen now. So even if it goes up 10% tomorrow and 10% next week, if you keep your money in cash, earning 4% on Robinhood, which you can get if you're a gold member, you can earn 4% safe, and you're waiting for the undervalued price. Now, if you feel confident and you don't need the money, and you just want to buy it at today's prices, then you can do that with the S&P. You can't do that with individual stocks, but you can do that on the index. Then fine. But if you are trying to maximize the gain, have some patience, because a crash will always come. And it'll be quick and sudden, and you won't know when it comes. The carry trade is one example. That's a real thing that could happen in the next few weeks. When that happens, you get a 20% drop, and then you go all in. Because the businesses have grown since then, they are higher up, but everyone's sold because everybody got margin called. It's not because the businesses failed, it's because people overborrowed. So you can wait, have patience. It's this, an example of that is when I went to sell my car. I told you about it. CarMax offered me money. I took 4 offers before I sold it to them. The offer kept going up and up and up. It's during COVID when no one could get hold of a car. And I got to the point where they were paying more than it was, about the same as what it was to buy it new. You're all right, mate. You carry on. So I waited and waited. And when it got to a certain level, I said, that's enough. I didn't push it and push it. I had 4 or 5 bites at the cherry and then went, okay, that'll do. I've done well. And it doesn't matter if anybody else gets a better deal or a worse price or better price. I've got a great deal. And I walked away. As it turned out, it was the very top. I was looking at the markets and seeing the supply chains coming in, cars starting to come in, parts coming in, thinking, okay, it's going to go down in a minute because you're paying more for a second-hand car than a new one. This isn't sustainable. It's not rocket science. So as the supplies came in, I sold it. So I held for a while, but I was happy with the deal. I don't think it hardly went at all higher at all, but it was perfect timing really. But it wasn't for that. It was just because of the supply was coming in. So I knew it was about time. So at some point we'll get a shock to the market. People will use it as an opportunity to dump the market and then just buy then. Right, let me see what we got here. Caden Youngquist. Hello, Caden. Young Caden. Not so young now. I think when we started the show, you were 17. You must be 21 now. Have you tried vegan diet for your health, Martin? Thanks for your advice. You're very welcome. A vegan diet. I leave all that to Leah. I don't know. Just try to eat as healthily as possible. It can be very difficult in America though, because everything is packaged in chemicals and processed. I mean, yes, of course you can buy fresh vegetables, and Leah does, and we have fresh vegetables and fresh fish and fresh meat all the time. But it's difficult because it's a lot more expensive than the processed stuff, isn't it? It gets expensive. You can get that in a month soon. What was that, Caden? Been missing the walk and talks. Let me know if you missed the walk and talks. The pandemic was my biggest lesson in the markets. My portfolio dropped, so did my heart, but I held. Now the S&P 500 ETFs are well above when they were, and my friends who sold regret it now. Yeah, well, it sounds like you learned with me, Nate. I came in at the worst time, which became the best time. I started buying the stock market when it rallied out of COVID and thought I knew what I was doing, thought I was really smart, really clever, because it was going up. And I thought, aren't I clever? Well, everybody was winning. A monkey would be winning. But it forced me to learn. And I was in a privileged position because I wasn't on my own. I had you guys. I was building a community, but I was also building a community with CEOs, hedge fund managers, Wall Street managers who know what the hell they're talking about. And I like to listen rather than talk, surprisingly enough. But I was able to learn, and I learned fast. But it was very painful. As you may remember, until a few weeks ago, I was $65,000 down. And now I'm about $7,000 up tonight, nearly $8,000 up tonight. So that's a $73,000, $74,000 swing in just a few weeks by remaining in. And every time we were a point lower, and when I talk about a point, I'm on about 18 times earnings, 17 times earnings. I bought increasingly big. So when it went up, because nothing goes straight down, I used my tax lots to sell for a wash, to take the ones I paid back to the shop too much, get my money back, if you like, and then continue to double down as it went further down. And now the results speak for themselves. Saab, good evening, mate. How are you? Be sure to stay hydrated. This heat is brutal. Yeah, I'm going to do one more. This has actually been quite nice. It's cooling down now. I feel fine, actually. I'm going to just do one more lap. So it'll be 3 laps tonight. Let's have a look. RB, I've got so much to learn, but I got in during the dip. Yeah, I'm going to try and encourage people not to use the word the dip, because it's overused. Buy the dip. I want to give information that's really useful. And I showed you yesterday that buying the dip is the wrong thing. Buying undervalue is the right thing. And it sounds the same thing, but it isn't. We don't want to simplify things. It's very easy to simplify things. Buy the dip, buy it when it's down. That's not how it is. That's very easy to say and very easy to understand, but it's not how it is. It's more complex than that. And to be honest with you, I will never buy a stock again now. I've got enough now to take me to $2 million, which is more than I need. And literally that's by the end of the decade now. We're on target for 1 million in 4 years. It was 12 years. It's down. Last month it was down to 5. It's now down to 4 years. Right, 4 years. Once you get to 1 million, another 7 years you'll be at 2 million just by doing nothing. Well, I'll buy the dip. Oh, here you go. I'm doing it now. I'll buy the new undervalued positions and I'll amplify that. Remember, I'll do $1 million trade. I'll sell $1 million and buy back in undervalue. So I won't buy another stock again, and I'll only buy the index when it's undervalued. So I'm looking at 17 times earnings. Simple. 17, 16 times, even better, 15. But that's it. I'm just going to wait for that. I don't need to do anything. I can go 10 years until stocks have outgrown the S&P and it's undervalued again. Who else we've got here? Zach. We don't go old. We become more experienced. I like it. RB, time passes by so fast now. I'll be rich before I know it. That's right. That's right. Hey, appropriate. Appreciate your conviction and dedication. Thank you, Darren. Yeah, I've got to the point in my life where time is everything. That time must be invested. It's the only value we have. Give everybody time. Everybody's got a voice. Everyone's important. Everybody can provide value. And if you just talk to one person like I'm talking to you now, you can make a difference. And other people will observe that and build quality and credibility. Don't try and entertain everybody. Try and entertain one person at the back of the room. Try and help one person and everybody will notice you do it. And provide quality of service rather than quantity of service. Up 12% on Enphase. Thank you, Martin. Yeah, I'm just saying, Enphase was my best tip of the year. I even told you that it would be my best tip of the year. I understand sometimes my comments are increasingly sounding super confident and perhaps arrogant, but I don't care if you feel that way. It's because you don't know me. People, when they met me years ago, would say I thought Martyn was arrogant, and then I realised it's just commitment and passion. It's not the same thing. People confuse it. I hope I'm not arrogant, but I am confident in what I know, and I don't mind saying it, and I don't apologise for it. So when you know, you know. I mean, it's just conviction, and arrogance is something that people sometimes display, and yet they won't be there. They won't show up. You know, I'll always be there. I'll always show up. So I can afford to be the way I am, and I'm happy with who I am. You've got to know who you are and be happy in your own skin. This is who I am, and this is what I do. And you know what I do, and you know I'm always here, and you know I'm not going anywhere, and you know I always tell you the truth, and it is what it is. But the Enphase Energy call was my best tip this year, only because I spoke to enough people in the solar industry to understand the business, read the balance sheet, and it kind of wasn't rocket science at all. In fact, it was really simple. Their margins strip out the competition, so no one can survive. Now we've got legislation turning towards solar. So now Enphase Energy, I believe Enphase Energy was up, 12% today? So it's my best tip of the year. Should I buy it? No, I shouldn't. I only own the S&P. Another top tip for you guys. I can tell you this now, that I would anticipate that WidePoint, you saw the CEO live on the show today. He requested to be on the show for the second time. And he was on the show today, and hardly anybody saw it. In fact, no, I think nearly 1,000 did now. But when you think we've got 86,000 subscribers, it's not that many. I expect the market cap of WidePoint to double within 12 months. That's not a tip. That's just based upon numbers, based upon what we learned from the CEO. That deal is going to go through with the government. It's 100 times larger than the previous bill, which doubled the price of the stock. So think about that. The deal is virtually done. It's hundreds of times larger than the previous deal, and that doubled the price of the stock. So they are well capitalized. They have the government contract, all good as. It's on trend. Doge involved with a government efficiency. It's right on trend with security and defense. So maybe even better than my Enphase tip would be WidePoint. Am I buying it? No, because I lose credibility if I do. Because you think, okay, he's just promoting it for himself. I could do that. I could buy $400,000 of it tonight, and it would go up. It would move on that. I could make 5% in the morning, but I'm not going to. And also, I don't need to, because I've got 470,000 now, and I can earn 47 grand with doing absolutely nothing. So why do I need to do that? So there you go. There's another one. Enphase Energy, WYY. Do you bought a Nike? Oh, have I bought a Nike? Roberto, good question. Nike, I can't be as sure of, but I think we are at bottom with Nike. Even though I didn't cover the earnings call tonight, I did read the transcript and watch the reports and talk to a few people. And Nike is doing some groundbreaking technology on their footwear. They've seen the worst of the downturn. The stock is now approaching oversold. It could go a bit lower, But if you don't mind it buying it and then being down 5%, just buy more. So if you've got $1,000, put 800 in. When you get a dip, if you want to call it that, I hate saying that now, buy a bit more and until your allocation is full. But we're about bottom, and you don't need to catch the bottom, do you? If you're going to own it rather than trade it. I think Nike has seen the worst of it. I'm not interested in buybacks. I don't like buybacks. Buybacks is promotional. It's not value to the shareholder. But Nike is a good business. It's had a hard time, and most of it's behind it, so that could be good. A dip can still be up from previous. Exactly. Very, very good point. Turk Pusher. Yes, a dip can certainly be up from where you were last time. But remember, every trade and every lot is its own trade. Don't be too concerned about that. And I discovered something else on my most recent testing of tax lots, because I'm always testing things, that you can actually reduce your margin by selling. Sorry, your average. Not that that's important, but if you're in margin, if you can bring your average down, it protects you from margin calls, because it makes your lesser paid stocks more protective of your overall position. So by using tax lots, if you sell from the top, let's say you sell from the top using tax lots at a wash, just to take some back, to replace the ones you bought further down. By selling the ones that are more expensive, your average comes down. Now you may go, that's obvious, but it's not. It's not always been that way. Normally when you buy, the average would only be affected by buys, not selling. Well, using tax lots, because you are actually selling the stocks you want from the top. Now that would always be my suggestion. That way you're getting rid of the higher price ones and keeping the ones lower. You can actually reduce your margin. You can protect your margin by reducing your average. It's a very, very good tip, that. Jerry and Elba, how you doing? Do you plan to buy General Mills? No. I don't buy single stocks, but I wouldn't buy that. I just got done walking 3 miles, still healthy. Justin Duke, fantastic. Can I get a refund on my mug? Buy the dip. Yeah, buy undervalue. I'll do a new one. Tomorrow morning, folks, it's our 4th anniversary. And in the first part of the show, we're going to announce the 4th anniversary mug. There's going to be maybe 10. And they will sell out within 1 minute. So be in the show tomorrow morning, because people collect them. You will see tomorrow from a video that Zach Zeit sent in. He's got every single mug. So he'll be there ready to buy one. And they will sell out within seconds. People collect them. I'm not sure the exact number we're going to have. It's probably like 10 or 20. But they will sell out in 1 minute. So if you want to get a 4th anniversary collectible mug, it's going to be the very first mug that's going to have something that's never had before. So you'll find out about it later. But that's for the morning. Please join us. Josh Monroe, vacation reminder. Vacation reminder. Josh Monroe, take a break. Thank you for the $5 super chat. That's awesome. Wow, I got $5 on a walk and talk. Thank you so much indeed. That's awesome. I'm going in. I'm getting really hot. I'm in the shade now. Just cooling down. Yes, I planning on taking a vacation from streaming in October. So I'm planning on taking a break. It's been a couple of years. Saab, how are you? I feel like I'm seeing Martyn the person instead of the character right now. I think I'm the same person, and I understand what you mean. I never wear makeup. I've never been different off camera as I am on camera. But yeah, I mean, maybe less animated because I'm holding a phone and I'm really hot and tired. I don't know. I'm expecting you to wear gold tomorrow. A very special Friday anniversary. God bless you, Martyn. Mean a lot to us. Jerry and Elba, yes, you do too. Saab, great guys. I hope you're both well. We love you guys. Crow, I was at work for the wide point video. Watching that next, yes. I think what we did, people said it was our best video, our best interview. The CEO has already said he wants to come back for a third time. He's invited me to do the earnings. He's also invited me he wants to commission me to write them a song, a wide point song. But I think what worked so well was the fact that I said, talk to me like a child. Explain to me what the stock does. And I think we did something tonight we've never done before, and it worked. When we cover all these earnings and you listen to all the technical jargon and what the FOMC say and all the reports that we give you, I wonder how many of you understand everything. I know I don't. And I think you'll do better as an investor to know a little bit well than you think you know everything badly. And I think a lot of us turn up and show up and they think, if we watch this and it's an earnings call or it's somebody smart and clever, we kind of learn stuff just by showing up. You don't. You just keep showing up because you didn't really understand it. Same as like when I used to do networking, you'd see the same people coming to network meetings or going to seminars, learning how to be famous, or not famous, but successful, and they were always there. And it's like, well, if you'd learned something, you wouldn't be here. You'd be doing the business, right? But they kept showing up. And I think sometimes we show up and we don't really get it all, but we keep showing up. So I thought today I'm going to do it different. I'm going to ask him to talk to me like I'm a child, like I'm an idiot. I don't have to understand it all. Just tell me what this product does. I did it after I got the inspiration for doing it after watching Margin Call, the movie, with Jeremy Irons. And Jeremy Irons, who's the billionaire, walks into the office and says, "Speak to me like a child or a Labrador dog. I can assure you it wasn't brains that got me here." And it turned out to be the best interview we've ever done, because he explained the product in a way that made sense to everybody. And because it made sense, it made even more sense, because it was simplified. It was very, very straightforward and simple. It was essentially, the product is a security token you put on your device, which provides you with a key to access secure services. That can be government services or offices, services, access information, verify yourself with a driving license, a passport, whatever. And then I asked about, well, are you going to put it on the App Store where we can all download it? And I knew that sounded really sort of basic and primitive. And he explained that's not what they're going after, but they'll get there by doing it another way, a much more effective way. It's not like two-factor authentication where you are your own verification and no one checks you, so you could be anybody. It's done through enterprise, like a driver's license. They've got your photograph, they've got all your details. So when they give you your tag, your token, that can be put on your device and then protected behind your PIN, your face, whatever, to lock it in. But then that verification it's real. It really is just you. It's only you. And if they put it on the Play Store, or if they put it on the App Store, it wouldn't have that. You'd just be downloading it, entering your name, saying I am who I am, and it would be pointless. It would be just a basic two-factor authentication system, right? But this will come through to all of us through our secure services, when we apply for a passport, when we get our social security number, when we get a job perhaps, when we go open a bank account, when we get a driver's license, we'll get these tokens sent to us to put on our devices. That's what they're doing. That's the business they're going for. And I thought, I get that now. And they're proprietary, they're unique. They've got a huge deal coming up with the government, hundreds of times larger than the last time when they doubled in price. So it's very, very simple, but it was like just talking to your mate. It was like, you know, this is the CEO of the company and he's talking to me like I'm his son, just telling me what this gadget does. But then you could understand it. And investing doesn't need to be complicated. We know the CEO is buying the stock. We know it's well funded. We know it's proprietary and unique and got protections and what it does. It's on trend with Doge, saving the government money. So simple, isn't it? So you can make a very simple, educated investment. Anyway, so there you go. I strongly recommend everyone go and check that out. I'm just finishing up these comments. I've got to go in, it's hot. The more I get older, the more I know that people love to make things complicated for no reason. Just had a conversation about that, what folding is with cooking and how it's just fancy mixing. Exactly. More walk and talks. Crow, thank you so much for your super chat. I can't thank you enough for that. I really appreciate that in this heat. That's lovely. $7. Thank you so much. I've earned $7 tonight. Thank you. I hope you've enjoyed the information. By the way, one of those few hundred viewers this morning watching the live show. I was. RB. Brilliant. Great stuff. I hope you all enjoyed it. Go and check it out. There's a few videos you should go and see today on the channel that you may have missed before the morning. There is the interview which was members only while it was live. Only the last 10 minutes it was then turned into subscriber only. So it was members only first, so all of you could get the pump. It then sold off as it always does. People bought into the interview and sold it off, so all my members got the best deal. You were able to buy the rally and take your profit, and that's what happens. So there you go. That's why we do members special events. Vaz is here, so go and check that out. Hiya Vaz, go and check that out. Also go and check out the video about is Jerome Powell political? There's a very good debate on that, and also some news on crypto. And I was really pleased that so many people watched it. I didn't think many people would, because it was my bread and butter. It was legal boring speak, but it showed us the direction of the SEC and the government and the Fed when it comes to crypto. So it was a really important. It enables you to buy with confidence. That's why I covered that and why I put it out. So there we go. It was great that he explained like we were kids, especially for us and not have English as native. Exactly, Kato, I totally agree. But you know, I think most people really would prefer it put like that. I think most people pretend to know more than they do. I think a lot of people don't understand it. They sit there for an earnings call and they go, I didn't have a clue what they just said. But they think because I've shown up, I might do better because I turned up and I pretend to know. I'd much rather go, I don't know a bloody thing. Can you just tell me something so I understand something? And that's what we're trying to do with the meet the CEO. Meet the CEO, have a chat. Who is the guy? What's the business? What do they do? Simple. That's it from me. Why did the crypto dip and stocks rise? Well, I haven't got time to go into that now. There's lots of reasons for that. That's my big argument with crypto. As I've said, if you own a stock that is very volatile and give you massive gains, but you're sitting around years for waiting for it, I mean, look at the S&P. Look how my portfolio has grown over the period of XRP going sideways. So even if XRP goes up 30% tomorrow, it'll probably be behind my S&P, and I'm earning dividends, and I haven't got to sell. You'd have to sell because you'd be worried it's going to go back down again. So I've said before, and I'm going to say it again, I will end up owning more crypto than most people here combined by simply owning the S&P, because we've now got Michael Saylor about to enter the S&P with strategy. Coinbase is going to go to the top. Ripple's going to come in. So I'm going to end up owning Bitcoin without actually having to buy Bitcoin, but I'm getting the benefit of the banks and the institutions that use it. So it's all very well saying crypto makes you more money than anything else and you can earn thousands of percent, and you're not going to get that with the S&P, but I don't agree. Because the very nature of the S&P is to employ the best performing businesses. And if the best performing businesses are crypto projects, they will enter the S&P and you'll own them without owning them. So I stand by what I say. If you own the institutions that own the businesses, you own the companies that solve the problems, that produce money and are undervalued, because you can't put a value on a crypto. You just can't. There is no value. It's whatever you say it's worth. So that's a winning strategy for me. Anyway, more bang for your buck, says Terry. What's that? We'll have the Love event pub tomorrow. Yes, we will. Absolutely. Right, I've got to go. Thank you ever so much, guys. Thank you for the super chats. Much appreciated. Go and watch those videos tonight. They're on the homepage. Look in the video tab. I will see you in the morning. Look, I've got two little rabbits. Look, two little rabbits. Look at that. Two little rabbits. Front garden, look at that. Hello, rabbits. How about that? They're just sitting there. We got an animal kingdom, family-friendly house. We have squirrels, we have rabbits, we have the locusts. They all hang out here. The cicadas, they all love it here. They're just sitting there, look. Rabbits, they're not going anywhere. They know me and Leah are nice, look. We don't chase them. Look, they're just sitting there. Hello, you're on YouTube. You're on YouTube. Do you want a super chat? If you do something funny, right? Yeah, one's coming toward me now, look. If you do something funny, everybody will super chat you. Which won't benefit you very much, but it will benefit me lots. Look, he's coming towards me. Look at that. He's actually coming towards me. That's got to be worth a super chat, isn't it? That's got to be worth a super chat. Rabbits love me. They're coming towards me. There you go. That's got to be worth a super chat. Because the thing is, if I get loads of super chats, I'll buy some carrots and I'll come out and feed the rabbits. How about that? Look at that. Come on then. Well, I'm very sorry, rabbits. They didn't give me any... I didn't get any super chats. You wasn't funny enough. Right, I've got to go. I'll see you in the morning. Watch the videos. Join me tomorrow. It's a members-only event. If you're not a member, become a member by tomorrow, because you'll miss a fun event. We're going to be drinking and celebrating, and people are going to be phoning in, just having a laugh, really. We will watch the inflation report. There will be the mug special. That will be available. That will sell out. And then we'll have the party in the evening as well. And tomorrow the banks do a stress test. So expect the banks to surge. We could have a 5% rally tomorrow on the S&P. So I'm in no rush to trim or sell or anything. I'm not going to anyway, but I wouldn't be doing that. That's it from me. Thank you very much, Martyn Lucas in Wonderland. That's it. 2 conies. Ooh, someone's talking about the Lord of the Rings. So on that note, I'm out of here. Take care of yourselves and each other.